Welcome to today's program titled Premises Pollution Liability Issues and Opportunities. At this time, all participants are in a listen-only mode. Later, we will conduct a question and answer session. For those of you who are logged into the web presentation, you're encouraged to submit your questions throughout the conference by selecting the chat pod located in the lower left corner of your screen, then type and send your question that way. For optimal sound quality, it's recommended that you listen to the conference via your telephone. Please do not forget to turn off your computer speakers if you choose to listen over the telephone. Look at the top left-hand column and click the speaker icon to turn the computer speakers on and off. If you choose to listen to the conference through your computer speakers and you experience any problems with the internet sound quality, please dial back in on your telephone. Thank you. I would now like to introduce our speaker for today's call, Mr. Bill Pritchard. Bill Pritchard is President and CEO of Beacon Hill Associates, Inc., a wholesale insurance broker and program administrator. For over 20 years, Beacon Hill has specialized in the placement of environmental insurance and other specialty coverages for agents around the country. Bill is a third-generation insurance professional and teaches pollution insurance classes nationwide. Bill, you may begin.
Thank you, Joanne. I appreciate it. And thank you all for participating today and joining us to talk a little bit about premises pollution liability. It's a topic that comes up often for us in our office. It's probably one of the fastest growing segments of the environmental marketplace, and it's something that I think is interesting because every agency has lots of these opportunities in-house. So what I wanted to go through with you today was a handful of things, starting with what we're going to cover as far as issues in the policy. What is a pollutant? Why does an insured actually have this exposure? What is premises pollution coverage? We're going to talk about how the coverage actually works, some specifics about form and endorsements and enhancements. We'll talk about typical insureds who need premises pollution insurance. And then classes of business who have pollution exposures. And there's different reasons why people buy this and different reasons why they need it. It's a little bit unique in our marketplace versus standard insurance issues. And then we're going to talk a little bit about common hurdles to selling premises pollution coverage, things that you might hear back from your insureds as you begin to discuss the exposures. And then we'll actually wrap it up by talking about where and how you buy the coverage, the application process, how difficult is it, what your expectations should be as far as pricing and timing and that sort of thing. And then at the end we're going to go through whatever questions we've accumulated during the session. So I definitely encourage you, as Joanne had mentioned, to please put in any questions as they occur to you during the process of the presentation, and then at the end I'll take a couple of minutes to go through them with whatever time we have left and answer what I can. So starting at the beginning, I think one of the most important things to work on and to understand in talking to your agents is the perception of what a pollutant is. So many people think and define in their mind a pollutant as a hazardous or chemical substance. So it's a pesticide, or it's a toxic chemical, or it's a radioactive material, or it's something that has a warning label that makes you think it's a hazard from a distance. But what a GL policy excludes as a pollutant is something much, much broader than that. A pollutant means any solid, liquid, gaseous, or thermal irritant or contaminant, including smoke, vapor, soot, fumes, acids, alkalis, chemicals, and waste. And waste includes materials to be recycled, reconditioned, or reclaimed. So if you think about that for a minute, it's clear that the GL policy is excluding things much broader than just purely hazardous materials. As an example of that, any product in too much quantity in the wrong place can be considered a pollutant. We have seen dust claims from construction sites deemed to be pollutant conditions because they were an airborne irritant. We've seen smoke from contracting operations be an irritant and excluded as a pollutant on a policy. We have seen milk spilled from tanker trucks into a stream causing a fish kill considered a pollutant. So it's very important to begin to understand and have your insureds begin to understand that the pollution exposure really is derived from what is excluded from their GL policy, and that GL pollutant exclusion is very, very broad. So moving on, premises pollution liability, which is what we're going to talk about today, is different and unique from the operational contractor's pollution exposure that we've talked about in other webinars we've done. Site-specific pollution comes in lots of different names. We in our office call it premises pollution liability because it's designed to cover a specific premises. It's also in the industry referred to as site pollution liability, pollution legal liability, environmental impairment liability or EIL, or site coverage. And the reason we use the premises pollution term here in our office is that very often retailers we work with will tell us that in their mind site is job site, it's not owned premises. These policies are not designed generally to cover a job site. They're designed to cover a fixed location where operations may take place. So it's definitely different from what you would buy to cover a contractor's operational exposure away from their owned site. In essence, premises pollution insurance provides coverage for pollution conditions at, on, or migrating from a covered location. So it's pollutants that are on the site, it's pollutants that have come to the site and been released from whatever their storage containment might be. It's pollutants that migrate from a site. So it all ties back to this covered location concept that the policy has to address. And that's really going to be a defined location or defined set of locations to which this policy applies. Some details about how premises pollution policies are put together. They're generally, well, I say in here they're always written a certain way. There are exceptions to everything, obviously. But I've only seen premises pollution policies written on a claims-made basis. What that basically means is there's a requirement for any claim to be reported during the policy period or any extended reporting period option that you might have on your form. There will generally be a retroactive date, as there is on much claims-made coverage, but not always. And we'll talk a little bit more further in about the distinction between new conditions and pre-existing conditions and where retro dates and delimitation dates and all these different things come into play. But in general, there will be a retroactive date in a policy, and it will almost always be claims-made coverage. Probably the single most important thing to walk away from today with, I think, is an understanding of just how incredibly flexible these policies are. They are, without any doubt, in what we work with in the environmental space, the most flexible forms available. They can cover as little or as much of an exposure as the insured wants to have covered, and as little or as much of the exposure as the insurance company wants to assume. We'll talk a little bit more in the slides that come up about some of the specifics about how that's actually accomplished. But I think it's really important as you think about this coverage and think about working with your clients that you can take a very specific desire to transfer risk and you can address it through this product. And you can take challenging situations where there's some existing contamination and some existing problems, and you can craft a solution that will provide a pretty wide range of coverage for them. One of the offshoots of this is that in this product line, more so than any other, I think it's really very important to understand what the insurance company is offering your client before you worry too much about how much it costs. We tell agents all the time, don't look at the price on the quotes we're sending you until you've evaluated the coverage and evaluated what the company is offering as far as risk transfer goes, because you will get two or three, depending on how many quotes you get, very different answers often from companies about what risk they want to transfer. So this flexibility is it's probably the greatest strength of this product, but it's also something to be careful about because you can get a product that doesn't give you as broad coverage that's a lot less expensive and think incorrectly that you're getting the same thing just for less dollars, and that very seldom happens in this line of business. So just a very important thing to keep in mind. One of the ways, or some of the ways, that carriers actually break these products up is in the distinctions I've listed in this slide. And This, I think, just begins to represent the different ways it can be done. This is not a complete list, and it's not an exhaustive list. There are lots of other sort of slices of the pie, I guess, that companies can utilize in different forms. But these are some of the principal ones. And they make a distinction in the form between on-site cleanup of pre-existing conditions, and we'll talk a little bit about what that means in a second. And then a distinction between on-site cleanup of new conditions. And so just thinking about how those two things would make a difference, when you're looking at people's responsibility for a piece of property and you're looking at contamination or things that might have happened in the past versus things that your current operations might cause in the future, this policy is very, very specifically written, or can be very specifically written, to address just one or the other or both. On-site third-party liability for bodily injury and property damage from pre-existing conditions. Same thing for new conditions. Off-site bodily injury and property damage to include cleanup stemming from pre-existing conditions. Same thing for new conditions. And there the distinction really is between on-site exposures versus off-site exposures. So again, you can have a scenario where you have an insured who, while they think they might have concern about their on-site risk, is not terribly worried about that. They're more worried about their off-site or third-party exposure that would come from a pollutant that migrates from their site. That's a really, that's a distinction that we see often, in that insureds will choose to be more concerned and want to transfer the risk on one versus the other. So again, these policies have that flexibility to do it. Also, air quality is an on-site pollution exposure, and I put that just to mention indoor air quality being one of the big reasons people are buying it for certain types of exposures now. That's an on-site exposure, and again, it can be third-party bodily injury, it can be first-party cleanup, it can be all sorts of different things. So it's really important, as I said, to just keep in the back of your mind as you start working with these products that this flexibility exists. Now the challenge will come in as you look at different carriers' policy forms, because most companies that I am familiar with provide this kind of crafted coverage. They just do it in different ways. So the policy forms are going to look different. There's no standardized premises pollution policy. There are some general themes that run through all of them, certainly, and they can all accomplish this level of specificity for you, but they will look different and they'll read different. And so as you get two quotes, you really need to sit down and determine what one company's retroactive date means when used in their form versus what it means when used in someone else's form. And that's one of the challenges of working with this product, and why it makes sense to really spend time understanding the products that you're working with as you approach placing coverage for your client. Moving on to, oh, there we go. Some important policy terms that I wanted to be sure to mention to you. Pre-existing conditions. That's basically going to be pollution conditions that occur prior to the inception date of the policy, or a delimitation date, or a reverse retroactive date that were unknown to the insured typically, although they don't have to be in certain circumstances. And so just to put a scenario behind all of this, if you have a property that is being sold and the seller of the property is being asked to provide indemnification for any environmental conditions that turn up in a period of time after the seller takes possession, pre-existing conditions coverage is what they would want to buy a policy for, because it would provide coverage for pollution conditions that occurred prior to when that policy was incepted. New conditions coverage, conversely, would be what the purchaser of that property may want to purchase, and that is coverage that's going to provide pollution coverage for your ongoing operations. So say, for example, you're a tank farm, or you're a machine shop, or some other exposure that has daily operations, and you have a release from a retention pond, or you have a storm sewer problem, or you have something like that occur. Those are new conditions that occur after you've incepted your policy. At or on your location is an important distinction to note when you're working with environmental policies, because most, and again not all, most policies provide coverage for pollution conditions at or on your site, but don't necessarily require that they started at your site. So this gives you coverage for contamination of your property that's caused by a neighboring property. So say, for example, you have a piece of land and you find out your neighbor, you find a sheen of oil on your duck pond or something, and you go get that tested and you find out there's a plume of contamination that's coming down gradient from 2 properties away from yours, and it's an old site that had underground storage tanks that were abandoned years ago, and that the party that was responsible for those is long gone, and you sit in a situation where all of a sudden your site is contaminated and you don't have anyone you can go talk to about it. Well, this policy would provide you protection in that case because the contamination is now on your site. So the migrating onto is actually a very important exposure that can be covered, and we actually see a fair amount of, in the universe of site claims we certainly see claims like that occur, where the insured is really a victim. They're not the person who caused the pollution condition. They're the one who has to deal with the ramifications of it. So another really important distinction to understand with premises pollution policies is the degree to which pollutants will be cleaned up. And most insurance policies basically say that the pollutant will be removed and cleaned up by the carrier to the limit allowable or required by regulations. So what that basically means is if you have a piece of property and it's zoned for light commercial, and it's pristine land, never been anything on it, and you have a fuel spill on it, the insurance company is going to clean that up to the standard required by that zoning. So in fact, there may be an allowable amount of environmental contamination given what that property is zoned to be used for. And again, an industrial zoning would be different than the zoning for a school or residential or well water versus city water, that sort of thing. So it's definitely important for insureds to understand that the policy responds to the level that it's required to respond by environmental statute. It doesn't require cleaning it up to the exact pristine level it was before. And that's something that we seem to have a lot of conversations with insureds and their agents about, just getting their hands around what the expectation should be of what this policy can do for them. Let's see. So enhancements that typical premises pollution policies have, and these are, a lot of these now are built into policies. Some of these are endorsements on some companies' forms and built into others. Some will show up somewhat automatically on quotes that you receive, and others you'll have to ask long and hard to get them added to your form. But these are all important things to keep in mind when you're looking at these. Mold, asbestos, and lead coverage in your site pollution form. They typically are, all 3 of them are covered to an extent or excluded to an extent. And that's because certainly asbestos and lead is generally, it's in a building that was built at a certain period of time, and there's not really a question about whether there's asbestos in a building built in the 50s or 60s. And so there's a degree of coverage in the form, usually for pollution that occurs while you're removing any asbestos or lead. But if you find asbestos and lead, it would not be covered. So it's important to take a look at those things as you look at your quotes that you're being offered in the policy forms. Mold is different in that mold is often excluded and then endorsed back in depending on what you're trying to accomplish with your policy form. And in some of the examples I'll give you later, we'll talk more about where mold really does come into play a lot and is a big issue driving coverage. Coverage for illicit abandonment, this is what we used to call midnight dumping. That's basically coverage for pollutants that are actually brought to your site and dumped on it as opposed to migrating onto your site. And that's when you have someone dumping illegal drums of material in the back lot in the middle of the night when no one's around and doesn't see it, or a piece of vacant land you have somewhere. So illicit abandonment is awfully important to get covered in your form. Coverage for underground storage tanks is not built into most site pollution forms. Coverage for above ground storage tanks typically is, but most forms exclude coverage for underground storage tanks that the insured is aware of, and then allow to have those endorsed onto the form. So if you have a UST exposure, it's very important to look at that and think through what you need to do with the carrier to make sure they're aware and schedule those tanks onto the policy. I say, the distinction between knowing about them and not knowing. It's most policies only exclude tanks if the insured knows they have them. So it provides coverage for what we call phantom tanks. So for example, years ago we had a claim on a site where they were tearing up a parking lot next to a building that we'd insured and part of the same property. And they tore up the parking lot and they found a storage tank that had been paved over under the lot years ago and a pretty significant plume of contamination, and that turned out to be in excess of $700,000 cleanup to deal with that. That was covered by that policy because it was a tank that no one knew about. Non-owned disposal sites, that's an extension of coverage. So if the insured is a manufacturer, for example, and they have a disposal site that they take their waste stream to, you can endorse that onto this policy so that there's coverage in the event there's a pollution event at that site that your insured is held responsible for. Transportation pollution liability is often endorsed onto site pollution policies, and that's effectively the over-the-road coverage that would apply to a pollution event that occurred during transportation. Business interruption coverage and loss of rents kind of go hand in hand. Those are enhancements that provide coverage for the insured in the event a pollution event disturbs their flow of business, and whether it's a tenant that loses access to their building or whether it's a third-party claim for business interruption. And we've actually seen a fair amount of activity in that coverage in that there are many scenarios where responding to a pollution event or the pollution event itself can really disturb the flow of business. So that's an enhancement that is fairly available for most of our markets now. Automatic coverage for new locations. Some carriers handle this in different ways. Some will allow automatic 90 days or even 180 days for adding new locations to a policy, assuming they do similar things as current locations. Again, that's going to vary a lot depending on the carrier and the types of operations that your insured is involved in. Diminution of value is where that's a liability coverage that applies to, as does stigma damages, really the quantified loss associated with having been contaminated. So you can have a neighbor who has files a suit against you because your contamination has caused them to lose value in their property because of the neighboring contamination, and that's an extension that can help you address that exposure when it comes up. So those are just some of the enhancements. Quite honestly, the list is so long. There are just new endorsements and new approaches to addressing some of these issues coming up all the time. Environmental underwriters and the environmental underwriting industry as a whole is a very flexible, very creative group of people, and they do a really wonderful job of trying to offer the broadest possible coverage to most insureds. And I think what you'll find is that when you work with an underwriter at a carrier or a broker or whoever you end up working with, you'll find that the ones who are experienced and know what they're doing will spend a lot of time helping you figure out what's the right combination of coverages for your prospect and what's the right combination of forms to really give them the broadest possible coverage. Before we move on to talking about who buys this coverage and that sort of thing, I did want to address something that I didn't cover too much in the beginning slides, which is the difference between known and unknown conditions at sites. The best way to explain this, I think, to insureds typically is using the example of a burning building and property insurance. Environmental insurance companies are not interested typically in providing coverage that they know is going to be immediately triggered to clean up contamination. So almost on a weekly basis I get a phone call from an agent saying, I've got an insured and he's got some contamination on his site and he wants to buy a policy. And my answer to that is, fantastic, I'd love to sell you a policy, but the only thing we can't cover is what he already knows about, because that's the part of the building that's on fire. And while there are ways to provide a degree of coverage for known contamination, it's very, very tricky to do it, and it's not the sort of thing where the expectation of the insured should be, I have a pollution problem, now I'm going to pay an insurance company to clean it up. The better answer is that we can wrap coverage around that known situation, provide coverage for lots of other things that may happen and may occur during the remediation of that contamination, but in fact aren't going to address that specific item. And that's one of the things I go back to when I talk to people about why they should buy this coverage, because you want to have it in place before you find the contamination, not after. And that's a tricky thing to do. Now, one of the exceptions to that is when you've had historic contamination at a site and it's been cleaned up and you've gotten a no further action letter from a regulatory body, your state EPA or whoever is in charge of that. In that scenario, we can provide coverage for that contamination if in fact it's ever reopened. And reopener coverage, as we call it, is actually very significant insurance to buy, because there are a lot of reasons why things that were given an NFA 10 years ago could be reopened tomorrow. Regulations change, acceptable levels change, drought affects the levels of contamination in monitoring wells and can actually cause spikes in constituent levels that actually make things have to be remediated again. There's all sorts of reasons why that's actually valuable coverage to look at. So there are scenarios for handling known contamination, but it's definitely a trickier part of writing this coverage. Okay, so moving on to who actually will buy this. Typical insureds who need premises pollution are going to be the owners of a property. One of my groups that I constantly am talking to this about is actually contractors, and talking to them about, they're always trying to ensure the pollution exposure from the contracting operations at a job site. And yet they have an owned site exposure back where they store their equipment and where they keep their, their office and whatever else they might have to make their business operate. That owned piece of property is typically an asset of that insured that they're looking at and thinking, hey, I own this yard. I've owned it for 2 generations. I'm going to sell it for a lot of money when I sell the business and retire. And then they turn around and find out that owned yard, that contracting yard, has been contaminated over years of equipment out in the rain and oil changes and all the things that happen. And so there is definitely an owned site exposure for pretty much every insured you work with. It's just a matter of whether they want to do something about insuring that exposure. And I think there's real value in that. The manager or operator of a property very often needs to buy premises pollution. If you are managing an apartment building or the operator of a nursing home, for example, you have very significant indoor air quality and pollution exposures that you can address through one of these policies. Anyone with a separate type of environmental responsibility for a property, and that can sometimes be contractual where there really isn't an operational exposure, but there's a contractual responsibility for it. The seller of a property will very often be benefited by buying a pollution policy to help facilitate that transaction. And the buyer of a property, the same exact thing. And we'll go into those two in a little bit more detail in a second. So why bring up premises exposures when you're talking to your client? I know everybody's very busy and everybody has a lot of things that you have to handle with your clients and a lot of issues and coverages to discuss. And we think environmental is important because in this climate today, in this marketplace, I think it's very, very important for agencies to take every opportunity to demonstrate their professionalism and the depth of their review of their clients' exposures. I think to get the best insureds, you have to go the extra mile, and you have to work hard to be sure that you're bringing the broadest breadth of coverage to the table that you can. The plus side is it also generates additional revenue, which is never a bad thing. And it also makes an account more difficult for a competitor to take away. When you've put the energy into developing a good, strong site program for an insured, you're definitely in a position where that's not easy for somebody else to walk in and ask for. And then the final one is, obviously protects your agency on the E&O front because, again, it's an exposure that you've identified and addressed. And, quite honestly, sometimes these conversations happen and the insured doesn't buy coverage. But I think you still get the benefit, really all of these benefits for the most part, from having the conversation. So I think it's important to spend some time with. Here are some examples of people that have pollution exposures. And I'll just hit some of these. Manufacturers, schools. We write a lot of different schools, both residential schools, boarding schools and universities, colleges, as well as high schools and elementary schools, office buildings, industrial facilities, restaurants, movie theaters, airports, car washes, hospitals, a lot of apartment buildings these days, light industrial sites, hotels. I mean, just the list really could go on, and this is just a sampling of it. But I think basically, any facility that's being operated certainly has an environmental exposure, and then the issue is just figuring out how you actually want to address it. So I have a few specific examples here that I wanted to go through for you just to let everybody sort of think about some specifics. This one is a real estate transaction, and it's an office building that's under contract to be sold. The buyer has done a Phase 1 environmental assessment and is part of his due diligence, and that report has come back clean, basically saying that there are no issues of environmental concern at the site. And the buyer is asking the seller to provide an environmental indemnification in the event in the next 5 years or whatever period of time anything happens from an environmental perspective that goes back to when the seller was operating the location. But they're unhappy with the seller's financial stability, and that's the interesting thing I think about environmental indemnifications is, it's only as good as the party agreeing to indemnify you, and sometimes in transactions the seller is maybe not quite as robust as you would want them to be to depend on that to happen. So the broker goes to an agent who offers an insurance policy in one of two ways, or one of several ways really. You can write it for the seller, supporting their indemnification, basically a policy that is only covering pre-existing conditions. You can write it for a number of years. Site pollution policies are very often written on a multi-year basis with a limit that stretches over the period of time that you buy the policy for. So it does not reinstate annually. So if you buy, we have several of these we're working on really at any given time. A pretty typical term for a site pollution policy is 3 years, and 5 years is another option we get very often. There are a few companies that are doing 7 and even 10-year deals, but those are getting fewer and further between. You just don't see the demand as much right now. So 5 years is a pretty attainable term to buy a policy for. And that limit is going to extend and stretch over that 5 years. It's not going to reinstate. So in this case, the seller could purchase a policy that says if any pollution conditions occur that are covered by the form that occurred prior to a date that we establish, which is the transaction date, and the policy term is for 5 years, so the claim is reported during that 5-year term, then this policy would respond. And so now instead of depending on a seller's indemnification, the buyer is depending on an insurance policy from an A-rated billion-dollar company. So a much stronger position to be in. You could also write this policy for the buyer, but only covering those pre-existing conditions. So they could remove the seller from the equation entirely if they wanted to. Or you could write it for the buyer covering both the pre-existing conditions and then also add in coverage for those new conditions that buyer might run into as they go forward. And the benefit there is that you're getting more coverage, the pre-existing and the new conditions, sharing the same limit, and that's going to bring down the cost of the new conditions coverage effectively, and that could be pretty attractive to a buyer to do it that way. At the end of the day, what's interesting is that this policy very often actually allows the deal to close. We found that commercial real estate agents who are aware of this product and have relationships with agents who do this sort of business generate a lot of opportunity, because they're seeing this stuff all the time, where it's a building that for one reason or another one of the parties is concerned and wants to purchase coverage. So that's one of the scenarios that we see often. Another example, and this is something that we're writing a lot of these days, is apartment complexes. So in this case, the applicant could be either the owner of the apartment building or the manager of the apartment building. Coverage provides typical on and off-site protection for both bodily injury and property damage. But the driving issue is often mold in these buildings, both from the BI and the cleanup perspective. And so as I said earlier, you can slice and dice this coverage a little bit so that you could actually purchase just the on-site exposures at the property and not worry about the off-site exposures. So you could exclude the coverage for contaminant runoff, or a discharge into a stormwater drain that causes contamination in a river. I mean, all those things that any physical site have from an exposure perspective, you could actually cut those out and stick with just the site exposures. And that also will then pick up things like swimming pool chlorine claims. We see a few of those every year. Landscaping chemicals. Wastewater and stormwater discharges actually would be an off-site exposure. But basically there are a lot of different things that are picked up when you look at covering an apartment complex type of account. We've been writing a fair amount of these in the last few years. The important thing is the procedures that the building owner or manager has in regard to responding to water intrusion and mold issues. That's going to be their mold maintenance plan. It's going to be how their staff is trained to respond when a tenant perhaps comes in and says, I found mold in my apartment. How the company manages that is it will directly affect the cost of their insurance coverage, really, and even the availability of insurance. When we're looking at this type of risk, property loss runs are actually very important to the carrier because they're going to want to look and see what sort of incidents of water intrusion and that sort of thing have happened over time at that location. So another one that we've been seeing actually a lot of is senior care facilities. And again, this is a similar type of situation as you had with the apartment complex, except it's even more challenging because it's a health compromised community. It's sort of in the same category as writing hospitals and daycare centers. Well, not daycare centers as much, but hospitals, that sort of property where you have folks whose health is maybe not as good as it should be or could be. And it also picks up the exposure. Indoor air quality, again, is a big issue with these properties, very much as they are with the apartment complexes. Also picks up sanitary cleaning chemicals. We've seen claims for those in these types of properties. And again, proper procedures are one of the keys to the underwriting, as are the loss runs. We've written groups of these facilities over the years, and the underwriters spend as much time on those property loss runs as they do anything else, and their GL loss runs actually, to determine whether there's been any kind of a history at specific buildings, and if there are, what steps have been taken to mitigate and control those. So. But again, an interesting opportunity as far as where people are buying coverage now. Airport exposures, I think, are a great example of someone who you can pretty clearly see their environmental exposure, but it comes from so many sources. And folks who specialize in aviation, I think, understand this well and sort of see these even more clearly than we do. But there are so many types of contamination exposures at airport facilities, including obviously aircraft fueling and maintenance, aircraft de-icing. If you are anywhere that enjoyed the cold winter this year, you've seen de-icing of planes, and all that product is ending up on the runways. You've got the presence of transitory aircraft even at smaller airports where you've got folks coming in and going out, and there's just the potential for long-term accumulation of contamination on the runways and on the tarmac. Stormwater runoff is a big issue for some airports, and control of stormwater runoff. We've actually insured contractors who go and clean runways, and that's what they do on a regular basis is high pressure wash runways to get all the contaminants off of it, and they have contracts where they're out there doing that on a regular basis because so much builds up over time. So coverage for these airports can provide on and off-site protection for BI, PD, and cleanup. We can cover the storage tank exposures that airports have. Usually they're above ground. Sometimes they're underground storage tanks. So those have to be carefully reviewed, as I said before, to be sure you're picking the right ones up. The transportation exposure on the airport, you've got fueling trucks that are driving back and forth, trying to make sure that the policy you purchase is correctly identifying and addressing that exposure on their property. And then of course with an airport you've got to look at the fixed base operator versus facility owner relationship and make sure that you are insuring the right party and that you have the right relationship between the two entities on any policy that you write. But they are definitely an area where we've seen activity for years really. So why buy coverage? Again, there's a lot of different reasons why different insureds will purchase coverage, but some of the main ones that we've seen are a contractual requirement. We literally on a daily basis get submissions from tenants whose landlord is requiring them to provide a pollution policy, and some of these tenants are no more dangerous sounding than insurance agencies, but they're still being required by their landlord to do it. We're seeing a lot more lender requirements, and it's really grown every year for as long as I can remember really, where banks are requiring any kind of an industrial purchase or many commercial purchasers to provide an environmental policy or have an environmental policy in place to protect the integrity of the facility, which is effectively their assets. So it facilitates a transaction. Often, as I said before, when you have a commercial transaction going on, sometimes it's what makes the buyer comfortable enough with the deal to get it done. And then it's just generally a great risk management tool. An environmental exposure is like a lot of things, doesn't seem like it's a problem until all of a sudden you have a claim, and then it's a huge problem. So that premium spread out over time is negligible compared to the exposure. So some claim scenarios that I'll just go through pretty briefly here. I want to make sure we leave enough time for some questions at the end. These are some that we've come across over time. A large dairy farm generates wastewater exceeding a permit. Over 1 million gallons of wastewater containing animal waste was released into the surrounding area. Cleanup costs exceeded $300,000. Fire in a medical office. In Delaware, 2 women were awarded a little over $1 million after their landlord failed to fix leaks and mold problems in their apartment. Both women claimed the landlord's negligence resulted in serious health problems and asthma attacks. Self-storage facility. I love these. Self-storage facility repossessed a locker from a renter who had missed several payments. Upon gaining control of the rental space, they found 12 drums of hazardous materials. The renter could not be found, so the owner of the storage facility was required to pay for the cost of disposal of the drums. In addition, soil and groundwater investigations were required due to staining on the floor of the unit, which resulted in the need to excavate several tons of soil. And that sort of thing, we've actually seen self-storage facilities that have turned out to have meth labs in them, and that environmental cleanup is a very, very expensive proposition for the facility owner. So, a local brewery, an ammonia gas leak in the refrigeration system, that can't be a good thing. And then a number of other ones in here, and I'm going to keep going only because somebody had asked the question a little bit ago about whether we'll get copies of slide presentations out to folks, and it'll be available on our website tomorrow. So if I've gone too fast or any of this, you'll be able to pull it up and kind of skip over to where you want to look. So I apologize if I'm moving too quick. Anyway, some of the things that we've come up with over the years in terms of how to talk to your client about it and how to kind of overcome some concerns that they might have. One of the issues is the growing awareness of environmental exposures in the general public. It's without a doubt increasing the risk to every insured out there right now. 10 years ago, I think the environment was so different in terms of what people's expectations were about contamination and what their tolerance level would be for that sort of thing. And I think it's important that insureds, they know about it for their neighbors and what they think about what's going on around them, and to recognize that there are people who are concerned about them as well. So coverage is more affordable, easier to apply for, and far broader in scope than it has been in the past. I think that's really important. One of the big hurdles that we found in the environmental marketplace is that everybody thinks it's going to be too expensive. And I've got some minimum premium information in here that we'll go over in a little bit. It's just not what it was cost-wise years ago. It's far more affordable now than it was. Certainly highlight some of the specific exposures. We can help with that at our office. If you ever have a particular client you want to go talk to and you're not quite sure what some specific issues they have would be, I definitely encourage you to give us a call, or obviously give any other environmental person you work with a call and ask them, because we can go down a list with you and help get some material to you that might help. Highlight or discuss advantages of buying coverage. Again, in my contractor example from a while ago, we've actually seen people who have gone to sell their businesses and found out that the asset they thought was going to be worth $1 million was worth nothing because of the cost to clean it up. And a small, inexpensive policy year after year really helps remove that, and is it's a long-term risk management strategy move as opposed to dealing with a specific immediate response usually. Common hurdles to overcome, typical site pollution, my GL policy covers everything. Well, unfortunately, probably not. My property policy will cover it. Again, that's typically a small sublimit for contaminated debris removal. I don't think I have an exposure. You can certainly talk about the reasons why they actually do. And again, I'm sorry I'm going to go a little quickly through this. I want to be sure to get to some of the material towards the end. I don't deal with hazardous materials. And again, we have some sort of explanation here about accidental release of fuel and chemicals from broken pipes, tanks, utilities are certainly some reasons. There are lots of things that are a pollution exposure that most people wouldn't expect to be. Never had a claim before. That's wonderful. It's a great time to buy coverage. Not required to carry it. That's true, although it's changing, I think, in a lot of cases. It's probably too expensive. Premiums for site policies typically start at about $3,000 these days. And then once you start doing that and then buying it out over 3 years or so, you can get very affordable coverage. And these are excellent carriers, excellent policy forms too. So. Chances of happening to my company are so slim, I don't think it's worth the money. Just a real quick example, we worked on an account a few years ago, and they had more environmental studies and reports done than I've ever seen before because they were adjacent to a landfill. And they had tons of work done, lots and lots of background, underwrote it. It was a nice policy. I think we wrote it for a 3-year term. And then they found out during construction of a store that was going in, they found an old underground storage tank nobody had known was there. And that last I heard, that claim was over $600,000. So even with a great wealth of information, the exposure can still exist. And believe me, they're thrilled they bought the policy. So some details. Minimum premiums are as low as $3,000, as I said. For standalone underground storage tank policies, which I really didn't talk much about, those are as low as $1,250. They're actually really probably closer to $700, $750 as a minimum premium for tank policies. Limits, typically start at $500,000 and go up. Claims made coverage retention start at $5,000. We have applications online at our website, which we welcome you to visit and look at any time. Submission requirements for premises-specific coverages in general. We need a completed site application. We need a good narrative of what the coverage is to accomplish, and that's because of the flexibility we've been talking about. A lot of these policies, the company wants to know what you want to accomplish. Are you trying to cover the seller? Are you trying to cover the buyer? Are you worried about pre-existing? Are you planning on doing something in the future? Kind of what's driving the need. Is it a lender? Is it a landlord? Is it a, and that will help the company craft and understand the exposure better. And I think it's really important. That narrative is sometimes as important as the application itself is. Copies of any site information available, phase 1s, 2s, 3s even, generally required for pre-existing conditions coverage. So you'd need a phase 1 typically at least to get pre-existing coverage. Now a lot of this, we can give you a good idea of what we can do on accounts with less information than this. And that's a phone call to our office and talk to one of our account execs, and we can discuss the account with you. When I look at apartment complex accounts, for example, we ask for the property schedule and the statement of values, and we send that to the underwriter and say, hey, this is what we have roughly, where are we going to be? And they can look at the units and the square footage and the other things they look at and come back and say, well, roughly we'll be in this range, and that gives us something to come back to you with and say, okay, if a policy is going to cost X, is this something you want to pursue? And then we get the completed application filled out. So we can definitely streamline that process and try to make sure that the coverage sort of and cost will match up with the insured's expectations, at least in general, before we ask them to go to the trouble of filling out a whole lot of material. Underground storage tank policies have their own application that they require to be completed. Copies of tightness tests if they're older tanks, and then obviously any remedial information on those sites, phase 1s, 2s, etc. Where can you go to get a quote? There are a lot of carriers writing environmental coverage right now. Direct writers is certainly one way. AIG, XL, ACE, Chubb all have very good policy forms. There are pros and cons to these that I'll go through a little bit. Pros is direct access to an underwriter to tell your story. You may be able to build on an existing relationship with that underwriter, and certainly the potential to integrate with other coverages with the same company. Cons is you get the product they offer you, and the beauty of this market right now is that 3 different carriers will give you 3 different answers to your question, and those 3 different answers allow you to sit down with your client and say, okay, this carrier will transfer this part of the risk, and this carrier will transfer that part, and this third one will do something a little bit different. Which one makes the most sense to you? And then that's who we focus in on. And that's hard to do when you work directly with one carrier. You can go to general wholesalers, and we've got some examples here. Again, building on existing relationships. Generally a little bit limited from an expertise standpoint. Some more so. Some do a very good job with it, some not as much. Maybe a little bit limited market access. So they're certainly a possibility. Joanne? Hi, Joanne. This is Bill. Can you hear me? Okay.
Yes, go ahead, Bill.
So I'm sorry, Joanne. I just lost the presentation. So, are you still there?
Yes. You should have control.
Okay.
Bill, go ahead.
Okay. I got it back. Sorry about that. Okay. All right. So moving on. So where do you get a quote? Last one, especially wholesalers like Beacon Hill. There certainly are other environmental specialty wholesalers out there. I tend to think we're a great choice. Extensive product knowledge, excellent market relationships. We've got tools that we've designed to help you actually explain and sell the coverage to your clients. And so it's we think the way we do it is unique and special and worth trying out. So what we offer, and again, I'm going to try to skip right to the end here because we have to wrap it up. But basically, account teams that are focused on environmental and energy, exceptional market access, a real understanding of the coverage differences, dedicated service teams, and a lot of web-based utilities. So I invite you please to go to our website. We have coverage guides, we have environmental FAQs, we have claim scenarios, glossary of terms, educational podcasts. We have just all kinds of good stuff on our website. So in summary, and actually I was going to ask Joan if she could do this. We actually had a survey we wanted to put up and ask you guys if you could take a moment to answer the question for us. So Joanne, can you do that? I think she's putting it up now. And this is, we're just going to leave it up for a couple of minutes or a couple of seconds if you all wouldn't mind. We're basically trying to figure out which sites in your current book of business you see the most opportunity in writing premises pollution liability on. Is it office buildings, habitational sites, industrial facilities, medical facilities, or perhaps others? So if you wouldn't mind answering that, just clicking on the choice that you would make, and then I think once it's run for a couple of seconds, Joanne will give us the results. In the meantime, I thought what I would do is try to send or try to answer some questions. There's a bunch that have popped up in here. One of the questions someone asked is it difficult to move retro dates back to include pre-existing unknown exposures? It's not difficult to, you don't really move the retro date back. You write a policy with no retroactive date, and when you do that, what you're effectively saying is that there's no earliest time that a pollution event could have occurred, and that then gives you full coverage for unknown pre-existing exposures. What's required from an underwriting perspective to do that will differ a little bit given the exposure that your property has. If you are in a built-up area or light industrial or something like that, the company will certainly want to see at the minimum a Phase 1 site inspection on that property. If, on the other hand, it's a vacant piece of ranch land 30 miles from the nearest town and it's had cattle on it or chickens or something like that for years, they probably won't. And they may be willing to give us that broader coverage without having a lot of environmental information on the site. But typically it's going to be relative to how much information you can provide and how high the exposure is from neighboring properties as well as the operations on that site. So that's one. Let me see this. Somebody asked a question about divested properties and covering pollution conditions from that, and we certainly can do that. Most site pollution policies or premises pollution policies will have a component of them that deals with what happens once you sell a site. And typically the policy will say you have coverage for this property up until you divest yourself of it. And from that point you only have coverage for pollution conditions that occurred prior to the date of divestiture. And so what that's really doing is saying that we'll give you coverage for the exposure that you're responsible for, which is what happened in the past, but we can't give you coverage for new conditions that are things that might have come up as the new party is taken ownership of the facility. So yes, you can. You can actually do this. We did one years ago that the property had been divested of about 20 years in the past, and they wanted to cover a window of time that they did own it, starting 30 years ago and ending 20 years ago, and we actually wrote a policy that covered that window of time only. So the site had been out of their control for 20 years by the time we actually first worked on it. So it's certainly a possibility. Joanne, are you going to tell us the survey answers?
Oh, they're shared on the screen right now, Bill.
Oh, good. Okay. Oh, so the percentages are up. Okay, so 58% of the people that responded thought industrial facilities were where they'd have the most opportunity. Absolutely. Well, that's great, and I think it's really interesting if you sit back and look at your book of business and start to see where you may find things coming up that seem very obvious, and then maybe some things coming up that aren't quite as obvious. I think there's a lot of opportunity in the space right now to meet with clients and talk to them about their exposures and talk to them about what you think we could do to try to help them protect themselves in the future. The last slide up here I just clicked to is for more information on the webinars we're doing or to suggest a webinar topic that you'd like to hear about. This is Robbie Davidson, our Director of Marketing's contact information. She does an absolutely fantastic job for us at Beacon Hill and has been at the root of all of this material. And so any thoughts you have, things you'd like to see us do in the future, just any opportunities or ideas that you have for us, please feel free to contact Robbie directly or contact me at any time. I don't think my contact information is in here, but Robbie can certainly get you to me if you need to. So, all right, Joanne, I think we're all set.
Great. Thank you so much, Bill. This concludes today's webinar. Thank you for attending.